Appreciate y'all inviting me to come here today. First, I want to start off, y'all seem like really good people, but who in here lives by the golden rule? Who lives by the golden rule?
Never has to go.
What is this?
It depends then, right? It depends. Well, I was expecting to say, the good rule. But anyway, the golden rule is, he who has the gold makes the rules. So that by itself is always a good reason to think about buying gold. Let me just go into gold as an asset. Gold is an asset, just like stocks, bonds, real estate. And if you're like me, whenever I look at an asset to invest in, I do a lot of research to understand it, its nature, what drives its value, supply and demand, all those different aspects and nature of an investment. So I would say that if you are considering gold or silver as an investment, it's incumbent on you to do the same thing, to research it and really get comfortable. And the reason I say that is gold is a very unusual asset in that as a commodity, it has very wild swings in value. And if you don't understand gold and silver and you buy into it and all of a sudden you have a 5% correction, 10% correction, you quickly begin to say, well, maybe I should sell it, I'm in the wrong thing. So, understand if you're going to buy gold and silver, it is a very volatile pricing commodity. And it's not unusual to see a 5% swing in 3 or 4 months from when you purchase. Usually you'll see a 10% swing in a year. Sometimes you'll see a 15% swing in a year and a half to 2 years. That is the nature if you look at the historical charts of gold. From one perspective, gold went up in value by 60%. In essence, really what happened was the dollar was devalued by 60%. Just to give you an idea, it's kind of a side. This is the $20 gold coin that was in circulation back in the day. And in 1933, whenever this prohibition went into effect, the 1933 gold coin was the last year that it was minted. There were no more gold coins minted. This is a $20 coin, and just the way they figured this out, $20.67 was the peg price for gold. This coin has 0.9675 ounces of gold, not quite an ounce. And when you multiply those two together, you get $20. So that's why this is a $20 coin, and it's a fractional coin as far as gold. Throughout history, since 1717, when Britain went on the gold standard, there was always at least one currency that had gold as a back. So when we went on, when he closed the gold window in 71, there was not one fiat currency, one gold-backed currency, only fiat currency, which meant that if you're in a country with a currency that got in trouble, you had no place to go as far as taking your wealth, getting it out of that currency into another currency to protect its purchasing power. And that's the system we're in right now. I'd like to ask a question and see if I can get somebody to give me some input. Have you heard that gold is too high to purchase? Or do you think that gold is too high to purchase?
Yes.
Yeah, I think so.
Okay. Yes. Well, let me offer you a perspective on that. This is not something I necessarily read in a book. It's just being in the business, this is the way I look at it. These are two 1 ounce gold coins, gold eagles, worth about $1,600 today. And you could have bought this coin 5 years ago for $900. Today, this coin is going to cost you about $1,600. Most people would say, well, gold went from $900 to $1,600. Price went up. I look at it differently because it cost you $900 here, $1,600 here. That's a $700 increase. But if you notice, I go down. This is to indicate that what has happened, gold hasn't changed. It's the same 1 ounce of gold. What has changed is the purchasing power of the value of the dollar. So the dollar has fallen. So when you say it's too high, is it really that it's too high or that the dollar has lost value? That's the question. I always tell my customers, if you're buying gold and silver, it's not cocktail discussion. Just keep it to yourself that you're buying gold and silver. At one point, it may be important. So, the actual mechanics of the way we value gold and silver. First, does anybody know what spot price is?
That's at this moment in time what the price is being traded at.
That's right. On the commodities futures exchange, you have buyers and sellers, and they have a price action that's reflected in the spot price that changes continuously. So anytime you're talking about gold or silver and the value of gold and silver, you're gonna be talking spot price, because everything's based on the spot price. Silver is always based on a dollar amount over spot. Gold is always based on a percentage amount over spot. The product will determine how much of each. For instance, this is a silver bar, 1 ounce silver bar. This is a 1 ounce silver eagle. The spot price today is about $28. This would cost you about $1.95 over that $28. So right under 30 bucks. This one typically trades for about $4.25 over spot. Right off you would say, well, this is the better deal, because if you're just looking at metal, if that's all you want, you're going to get more metal for your money. The difference is the buyback. You have to understand what the buyback is in anything that you're going to purchase first. The reason is it's different. Whenever you come and you sell this to me, I'm going to buy it back from you at 50 cents or $1 under spot, below spot. This one I'll pay you usually $1 to $1.50 over spot. Yes?
How often does the buyback change?
My buyback is pretty consistent. The only time it really changes is if we're in a market that's moving so fast that it's kind of scary, and you sell me something, I give you a price, I'll buy it from you, an hour later I'm underwater. So
you can pretty much use it as a predictor.
Oh yeah. Very seldom do I change my spot price. I've recently changed it, not my spot price, my premium. I recently changed it just a week because the U.S. Mint has a hold on silver, or they're running out of silver. It's taken anywhere from 2 to 3 weeks for me to get a box of silver like this. Usually I get it in 2-3 days. I mean, there's plenty of it out there at all the dealers that I deal with, and I call them up, they ship it. It's no problem. But right now there's a shortage out there. So the bottom line is there is a difference between these two coins. You're probably going to have an effective premium between buy and sell of about $3 to $3.50 on a silver eagle. You'll have about $3 to $2.50 on a bar or a silver round. Silver rounds and bars, same thing, just different form. Pure silver, 1 ounce. And
so I was going to ask, those are 100% silver? No.
Silver, all this silver, we trade silver that's 0.999, pure silver. We don't trade anything in sterling silver, which is the jewelry and the silverware, flatware, that kind of thing. We buy that, but it's not a tradable commodity that we deal with. So only 0.9.
What's the difference in a sterling silver and
92.5% of sterling silver is silver. The rest of it is some other alloy, usually copper. Or,
oh, okay.
Yeah.